We'll be going over IRS Form 3800, General Business Credit. So this is the tax form that many small business owners may use in consolidating tax credits from a variety of different forms. As we go through the form, you'll see exactly how many, but there are dozens of forms which enable taxpayers, business owners specifically, to claim tax credits across a variety of investment type activities. And then those credits are consolidated onto IRS Form 3800 as a general business credit. So there are certain limitations to how much of a credit you can claim in the current tax year, and then any credits generally that are disallowed can be either carried back or carried forward into future tax years. So there are specific rules when it comes to the order in which credits are used or eligible to be used. There are rules in terms of how to use credits. So using carry forwards first, then the general business credit that is earned in the given tax year, and then carrybacks to the tax year. So there is a little bit of complexity to this form. This article will simply kind of walk through the mechanics of completing the form itself, and we'll attempt to not stray too far into some of the peripheral topics that we could discuss. If there are questions after you watch this video, please post them in the comments section, and I'll do my best to research and create a video or an article to address those questions. So as I mentioned, there are three parts to this tax form. Part one is for the current year credit for credits that are not allowed against the tentative minimum tax. There's the allowable credit in part two that you'll calculate. And then finally, part three contains the general business credits or eligible small business credits. So you have to complete part three before you can go to part one. It actually says this at the top of the form. So it says complete parts three before parts one and two. So while we recognize parts one and two are in chronological order, we're going to skip down to part three because there's a little bit of complexity that we need to go over. At the very top of part three, you'll see several boxes marked A through H, and you only check one box if, and depending on which type of credit you're claiming, whether it's a business credit from a non-passive activity, a credit from a passive activity, both of those credits are in the given year. Box C would be a general business credit carry forward from previous years. Box D would be general business credit carry backs from future tax years. And then box G is set aside for eligible small business credit carry forwards. So for each box that you check, you must complete a separate part three. So for example, if you were going to claim business credits from a non-passive activity as box A, you would check box A, then you would complete this part three with all of the information from each of those forms. And you would follow the instructions in part three so that you can carry that up to parts one and two. However, if you were then going to calculate general business carry forwards or business credit carry backs, you would have to complete a separate part three and then check that specific box. And furthermore, when we get into completing the form itself, you may need to complete multiple parts three with a box A or a box B checked. And the reason you may have to do that has to do with the employer identification number that is attached to a credit if you're claiming that credit from a pass-through entity such as an S corporation or a partnership. So for line 1, you can see that there are approximately 26, 27, 28, 29 different types of credits available. It is highly unlikely that any one taxpayer will use all of these tax credits. And then under line 1ZZ, other, these are certain tax credits from a variety of different forms. These are tax credit carry forwards according to the form instructions that come from forms that you may no longer exist. So for example, an example of a credit that you'll find in line 1ZZ is a Hurricane Katrina housing credit that would have been filed on IRS form 5884A. So Hurricane Katrina was quite a few years ago. However, there may still be corporate entities with carry forwards from all the way back in 2005. So we'll kind of outline just broadly what you'll end up having to do for each of these lines. For example, in the investment line 1A, you're going to enter the appropriate amount from part 2 of your attached form 3468, which is the investment tax credit. If you're claiming this from a pass-through entity, you would enter the EIN on this. So let's imagine that you're, and then you could claim $1,000 as an investment tax credit. Now, if you have multiple pass-through entities and you're looking to claim the investment tax credit from more than one pass-through entity, you would have to file a completely separate Part 3 specifically to report this investment tax credit from a different EIN. So let's imagine that you have two investment tax credits that you're passing through from two different S corporations. You would enter this on one line 3 after having checked, let's just say, box B. Then on a completely separate part 3, you would report that amount on a completely separate form. Even if there's nothing else to report in any of these other tax credits, you still would have to claim the credit from, if there are two different sources of credits on any one line, you have to put each source on a separate part 3. So, without going through all of the painstaking detail of every single tax credit from orphan drug development to distilled liquors and mine rescue team training, we'll kind of just cover this with a blanket statement of the appropriate taxpayers probably know which tax credits apply to their situation. And once you complete all of these different line 1s, then you would go to line 2 and you would add the totals of lines 1A through 1ZZ. So let's imagine that you had a bunch of other tax credit carry forwards. So it could be from Form 3468. There are several other forms like IRS Form 5884. That would be the work opportunity tax credit. There are a lot of other tax credit forms that may no longer exist. For example, like a welfare to work credit, I believe, has been replaced by the work opportunity credit. So let's imagine that we have $5,000 of a carry forward from all of these other items that we've placed into line 1ZZ. So in line 2, we'll simply add these two, which is $7,000. So then we'll go to line 3. Line 3 has to do with amounts reported on IRS Form 8844, which is the renewal community employment credit. So if you have any amounts that are reported here as a carry forward, you would include that here. So for the sake of this video, we'll assume that we don't have any of those credits. And then lines 4A through 4Z, we have some more tax credits that we are looking to claim here. Now, I will caution you that some of these line items contain a line that says carry forward only. This is important because there are certain tax credits where you can only claim a carry forward from a credit that was disallowed in a previous tax year. So if there are specific credits that apply to your situation, be sure to take a look at the form instructions. A lot of the form instructions either have something to do with limitation on, like a dollar amount limitation on the credit that you can claim. For example, line 1E, disabled access, has a credit limit of no more than $5,000 in a particular tax year. For line 1K, employer provided child care facilities, that limit is $150,000 in a given tax year. So these dollar limitations are annotated with an asterisk. So you can see one here, you can see one here, and so pay attention to the dollar limits and then any additional guidance in the form instructions, because they'll actually tell you where to get those the exact line items, right? So on, for example, on line 1J, which is new markets, line 1J is small employer pension plan startup costs and auto enrollment. You would enter the amounts from IRS Form 8881, line 8 and line 11. You'll enter the total here in line 1J. So be sure, if there's a specific tax credit that applies to your business, make sure you read the form instructions so you know what number you're pulling from which form and which line. So in line 4A, you have a similar series of different credits. So you'll combine those as well. So let's just say we have $3,000 of credit from biofuel producer. As a biofuel producer, you'll enter the total of all of those credits in subline 4 here, and then we'll carry them up to part 2, and we'll see that in a moment. With line 6, you're going to total all the lines 2, lines 3, and then lines 5. So line 2 is $7,000, line 3 was 0, line 5 is $3,000. So we have a total amount of $10,000 as a tax credit that we'll put onto the applicable part of line or part 2. So now that we've calculated the amount of tax credits that we may be able to claim, we've got to go to the top of the form to calculate the amount of tax credits that are allowed in the current year based on our tax liability. So because of the complexity of this, and because in realistic fashion you would probably have multiple parts 3, I'm going to make up numbers to put into here just for illustrative purposes, but do understand that you're likely going to have multiple parts 3, like for example, general business credits with box A checked. Then you'll have separate parts 3 with passive activity credits, so on and so forth. So we'll just say that our summary of this tax form, we had $5,000 of credits from all the parts 3 with box 2A checked. And then we had $10,000 of passive activity credits. Now, in part 1, line 3, you'll enter the applicable passive activity credits allowed for the current tax year. And this is going to come from either IRS form 8582-CR, which is passive activity credit limitations, or IRS form 8810, passive activity loss and credit limitations. So this passive activity credit amount that's allowed only applies to general business credits that were not allowed against tentative minimum tax on line 2, plus any prior year unallowed passive activity credit from general business credits. So if there's previous passive activity credits that you were not allowed, you would put them in here. So let's just say that we carried forward $5,000 of passive activity credits. We would then add that to the $10,000 and it would result in a $15,000 applicable passive activity credit. This is the passive activity credits that were previously disallowed plus the $10,000 we just put into line 2. Now in line 4, we're going to carry forward any general business credits, which is from line 2 of part 3 with box C checked. If you recall, box C was the carry forward and then box D were carry backs. So let's imagine that we have $1,000 of carry forwards. You'll check this box if the carry forward was changed or revised from the original reported amount. So if you carried this forward from tax year 2021, but then or 2020, and then you had changed that one, then you need to annotate that in this box. And then if you're carrying back general business credits from a future tax year, in this form it says 2023, then you would enter the amount from line 2 of part 3 with box D checked. Obviously, if you're completing this for tax year 2022, you're not going to be including any carrybacks of a general business credit from a future tax year that hasn't even completed yet. And then on line 6, you're going to add all of the lines 1, 3, 4, and 5. So we've got looks like $21,000 of applicable credits. Now this is current year credit for credits not allowed against tentative minimum tax. So basically, this is what you may be able to claim. Now, you have to balance that against your income tax liability, not just regular tax, but any alternative minimum tax or what the IRS considers a tentative minimum tax. So in part 2, we'll go through this just step by step. For individuals, you'll enter your regular tax based on the sum of your 1040, line 16, plus line 2 of your Schedule 2. For corporations, you'll enter the amount from line 2 on Schedule J of your Form 1120. and then estates and trusts will enter their amount from their tax return, which is 1041. Schedule G, lines 1A and 1B plus any Form 8978 amount that was included on line D. So let's just say for purposes of this, we have a $50,000 regular tax. Now you also have to compare this to the alternative minimum tax. So if you have to complete IRS Form 6251 as an individual, that's the AMT form, you would enter the amount that's indicated on line 11. There's a separate AMT for estates and trusts on line 54 of Schedule I, and then regular corporations do not have an AMT. So for this purpose, we'll say that we have no AMT liability, so we'll add line 7 and 8, and we've got $50,000. In line 10A, we're going to enter any foreign tax credits that may have been claimed on the foreign tax credit form. Let's just say there's $1,000. For line 10B, there are certain allowable credits. So for individuals, this would be on line 19 of your Form 1040 and Schedule 3, lines 2 through 5, and line 7. So let's imagine that we found $500 worth of those credits. You would add those items up with a result of $1,500. Now, these tax credits, you have to back them out of your tax liability up here, so that because basically they apply against the eligible general business credit. So you have to back that out, which lowers your effective business credit that you might be eligible to take. So now you're also going to subtract, because we just used this to calculate the net income tax, you have to also subtract line 10C from line 7, which was the regular tax. In this case, it happens to be the same. However, this would be a different number if you had an AMT, alternative minimum tax here. So in here, you'll enter 25% of any excess over $25,000. So what I'm going to actually do is make this math a little bit easier and round this all up. So now we can take any amount that's over $25,000, multiply that by 0.25, and enter the result. So that ends up being $57.50 that we'll enter here. So we'll then enter the tentative minimum tax again from the appropriate line. So for individuals, that would be from line 9 of your AMT form. For estates and trusts, that would be from line 52 of Schedule I. And again, we'll just say that there's no tentative minimum tax. In this case, we'll enter the greater of either line 13 or line 14, which is $57.50. We'll then subtract line 15 from line 11, so $57.50 from the $48,000. That gives us a total of $42,250. And then we're gonna enter the smaller of either this line 16 number or the number that was in line 6, which was $21,000. So now for C corporations, there are specific instructions in the IRS instructions regarding ownership changes, acquisitions, or reorganizations. So if any of those are applicable to your situation, take a closer look at the form instructions. There's additional guidance on how to annotate credits based on certain parts of the tax code. We'll assume that that does not apply to us, and we'll move down accordingly. So in line 18, we're going to multiply the amount from line 14 by 75%. This turns out to be 0, as you can see on line 14. And then we're going to enter the greater of either line 13 or line 18. And that number is 5750. Now we're going to subtract this 5750 from the number in line 11, which was our net income tax, and that should give us 42,250. If this number is 0 or less, then you would enter 0 here. You don't need to enter a negative number. You'll subtract line 17 from line 20 here. If that number is less than 0, then you would enter 0, but in this case, it would be 21,250. Okay, so now you're going to combine the amounts from line 3 of all parts 3 with box A, C, or D checked. Those are the general business credits for the current tax year, carry forwards, and carry backs. So for this purpose, let's just double check down here, and we've got sorry, not a good example because we don't have multiple parts 3 here. But let's just say we have $10,000 that we're going to enter here. We would also set aside any passive activity credit from line 3 with all parts 3 with box B checked, because that's a passive activity credit. So we'll put that over here on the side with line 23. For line 24, you're going to determine the applicable passive activity credit allowed for the tax year. Again, this only applies to certain credits that were reported on line 3, the empowerment zone and renewal community employment credit. This is what we discussed down here. So this is the amount that we would then carry up to this applicable line here. So we'll say that that's 0. Then we'll combine lines 22 and 20 and give us $10,000. Now you'll enter the smaller of either line 21 or line 25. This is the amount of the empowerment zone and renewal community employment credit that you would be allowed. Now in line 27, we're going to go back to lines 13 and 11. So we're going to subtract this from this. If this number is 0 or a negative number, you would enter 0. Now for line 28, you're going to enter the combination of line 17 and 26. So on line 17, we had $21,000. On line 26, we had $10,000, so that's a total of $31,000. Now we're going to subtract line 28 from line 27, and that gives us $11,250. In line 30, we're going to enter the general business credit from line 5 of all parts 3 with box A checked. So if you remember, there were all of these tax credits up here under line 1, and then line 2 was the sum of all of those, and then line 5 was the sum of all of the different tax credits on line 4, A through Z. So you're going to combine those separately as general business tax credits. And let's just say we had $5,000 of those. And then again, we'll do this with passive activity credits that we also totaled here. For the sake of discussion, we'll just say that that was $1,000. In line 33, you're going to enter the applicable passive activity credit amount for small businesses that were allowed against tentative minimum tax, and eligible small business credits that were allowed on the respective passive activity credit form. So this amount that's allowed on line 33 only applies to the general business credits from line 32, plus any prior year unallowed passive activity credit from general business credits that were reported on line 4. So it's at least this plus anything that was from a prior year that had to be carried forward to this year. So let's just say there was another $1,000 of unused credit that we need to carry forward. So in line 34, we're now going to carry forward or enter any carry forward of business credits to 2022. So this would be any amounts from line 5 of a part 3 with box C checked, or line 6 of part 3 with box G checked. So remember, box G is eligible small business credit carry forwards. Box C is general business credit carry forwards. So we'll just say that there's $1,000. Again, check the box if the carry forward was changed or revised. And then carry backs, we'll enter carry backs, which would be in any part 3 with box D checked. So let's just say that there was $1,000 of carry backs. So now we're going to enter we're going to add all of these lines up. So the totals of line 30, 33, 34, and 35. So we come to a grand total of $9,000. We have to compare that to what we previously calculated up here, which was $11,250, and we have to enter the smaller of those two numbers. So we'll add lines 28 and 37. So 28 is $31,000. 37 is $9,000. So we are allowed to claim a credit of up to $40,000 for the current year. So you'll report this number from line 38 if it's smaller than the sum of line 36, line 25, which is 19,000, and then line 6 being 21,000. So that ends up being a total of $40,000, and coincidentally, that happens to match the number that's on 38. However, if for some reason you added line 6, then line 25 and 36, and you came up with a larger number, then you would have to enter the $40,000. There is instruction on what to do with the remainder amount. That has to do with carrybacks and carry forwards of unused credits. So that is probably a separate discussion that's a little bit outside of the scope of this video. However, if you do have carrybacks or carry forwards, the form instructions do contain detailed guidance on credit ordering rules, how to order your tax credits, which tax credits to use, first, second, third, or last. What happens if you change your marital or your filing status. So there is a lot of other discussion, that is in the form instructions that you may need to refer to make sure that you've completed this form properly. So that's all we have for our discussion on IRS Form 3800. We have broken this down in a little bit more detail in an article on our website. You can simply go to teachmepersonalfinance.com, type in IRS Form 3800 in the search bar, and you should see our article. If you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. If you have any questions or comments or concerns, or if there's anything that you would like me to discuss in more depth in a future video, please post a note in the comments section or send me an email. Thank you very much and have a great day.